In an apparent bid to arrest the fall in its stock price and instill some confidence in investors, the board of 197 Communications on Tuesday announced a 850 crore rupee share buyback by Paytm through the open market route. It comes within 13 months of the loss-making digital payments majors listing. The shares of Paytm have tanked about 75% from the IPO price. Under the buyback scheme, a company purchases its shares from investors and shareholders by offering them a better price from the current stock price. It is seen as a tax-efficient alternative for returning money to shareholders. The maximum size of the Paytm buyback is 850 crore rupees, excluding the buyback tax. Paytm said that the maximum buyback size was less than 10% of the company's total paid-up share capital and free reserves combined, as on March 31st, 2022. In India, a buyback's maximum limit is 25% of the company's aggregate paid-up capital and free reserves. The 197 Communications Board approved the buyback at 810 rupees per share, which amounts to a discount of over 60% on the IPO price. However, it is also a 50% premium to Tuesday's closing price. Since its primary market debut, the Paytm stock has witnessed a sharp decline. Its IPO was India's largest back then. The company had raised 8,300 crore rupees by issuing fresh shares at 2,150 rupees apiece. The issue also comprised a secondary share sale worth 10,000 crore rupees. On the bourses, shares of the fintech company fell 3% to 525.60 rupees in Wednesday's intraday trade, before closing at 529 rupees apiece on the BSE. In recent weeks, analysts had turned more positive about Paytm's stock. According to Bloomberg, in what was the highest such number since its trading debut, 8 of the 12 analysts tracking the stock were recommending a buy or equivalent rating. In a note to clients, analysts at global brokerage JP Morgan wrote that they expected the buyback to provide support to the stock price in the near term. We reached out to market analysts to find out how the buyback would impact investors and the stock.
When it comes to open market buyback, it's like up to 810, not exceeding rupees 850 crores, which practically means nothing stops them from buying at 500 or even a level of 450. So don't really expect the stock to move up due to this buying, if at all. Markets have anyway punished them for the high valuations. Possibly this could continue a while longer.
Paytm reported a widening of its consolidated loss to slightly over 570 crore rupees for the September quarter. However, its net loss narrowed on a sequential basis. According to a company statement, the Paytm board believes that the buyback is a sign of confidence that the company is on a clear path to deliver cash flow profitability. The board also believes that the buyback will not have any impact on Paytm's plans to become profitable and for growth in the near future. Usually, companies consider EBITDA while looking at profitability. But in Paytm's case, the fintech firm is looking at an EBITDA plus calculation, factoring in ESOP costs. Paytm says it is ahead of its plans to achieve profitability on this basis by the quarter ending September 2023. But the buyback has drawn skepticism with regard to Paytm's growth prospects, and not everyone is so sanguine about the company's future.
As per the last two quarterly results, if one has to annualize, this year could well be about 2,500 crore worth of loss as far as I think the business operations of the company is concerned. We do not see the revenue model and the profit-making model. I think the money which was collected for building the business is now being paid off to investors who invested into it. This could possibly be starting of, I think, a significant amount of fall for the business of Paytm per se going forward. So one will have to wait and see how exactly they manage to arrest losses and how they manage to survive in a situation when they are depleting cash from the balance sheet.
Paytm expects to spend slightly over 1,000 crore rupees on the buyback, including the applicable buyback taxes. At the end of the September quarter, the company had a cash reserve of almost 9,200 crore rupees, including the unused proceeds from its IPO. However, won't allow it to use the IPO proceeds for the buyback. Ahead of the buyback being approved, Institutional Investor Advisory Services, a governance and voting advisory firm, had highlighted key questions that Paytm's board needed to answer before giving its nod. So, have the concerns on the governance front been addressed?
The question we were asking is that the company had certain objects and plans, objects of the issue, and certain plans when they decided to do their IPO. Now, what we were hoping for was that at the time of announcing the buyback, the company would be providing clarity with regard to, are these objectives met? Are the plans which they had envisaged, are they rolling out and are they on track? Or is there any change? So we are not clear in terms of their announcement, in terms of where they are. Though, of course, when you see the numbers, they do show that there is an uptick in the performance. The other question which we are asking at this stage, of course, is that how prudent is it for the company to kind of decide to do a buyback before they've kind of turned cash flow positive. Increasingly, what we find is that the regulatory lens on the NBFCs and the fintech is sharpening at this stage, and therefore we can see we can expect some regulatory tightening. So, is it prudent to have held the cash back, or is this the best use of funds? So that's the question we were asking before, and I'm not sure we've got a clear answer to that question.
I find it very strange that within a year or almost a year of IPO, they are going for a buyback. Now, when you raise money in IPO, you have some object of the issue for which you raise money. And they are saying that they are not returning the money which they raised in IPO, but their money which was lying pre-IPO. Now, it is a very strange phenomena in the sense that how can I say two compartments that I have money before IPO, so this money I am not going to use for the purpose of the company for which I am raising a fresh money. So that means what for that money was lying. And other thing, I will always raise a governance concern that the probably company is not telling the truth. Either they had raised more money than they required, then they should be investigated why they had done that, or there is something amiss here.
There are unanswered questions around the buyback decision, in particular, using its cash to manage the stock price instead of putting it to use for business has raised doubts about the company's growth prospects. As such, Paytm should try and put these doubts to rest as soon as possible.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.